Hello. Okay. 2nd of February week. Outlook very straightforward. Okay. The last week was obviously problematic. Probably one of the lowest range weeks I dealt with. I think I only did just under 200 pips. We're not even 150 actually. Comparable to like a December holiday seasons are kind of low range. So the bad results are I'm not saying justified, but reasonable basically to assume. Of course, there was some executional errors. Okay, but we learned from that and exactly the kind of week I needed in terms of really perfecting my weapon, my strategy basically that I'm gonna now use in better conditions to, you know, make some really good, hopefully, gains on the account. Because I actually think it's easy. I just literally all I need to do is if I could just put it in one sentence, just follow my model. Literally. That serves me so well. So quickly I want to go over these. High resistant liquidity runs, okay. More times than not. It's just gonna be better to leave the trades completely all out, like literally just leave the trades that were require me to think too much. That's like an easiest sign. If I'm thinking too much, that means I'm basically being impacted by both the bullish and the bearish ideas because it looks both ways, meaning whichever I'm taking, there's going to be a high probability of me being wrong. Coupled with the fact that there's manual intervention, things go even more out of favor. So that's one easy win here. And also, of course, you want to be entering with a bigger you want to be entering a really IRL entry internal range, especially if you've been taken out, as well as with a bigger than normal stop loss because it's shown that it's high resistance and it can go a little bit beyond what it would normally go by because it's trying to spend more time basically in a given range. So the ratio of how much price moves for a given time, that ratio basically increases. Price spends more time, but sorry, more price in a measure of time compared to a normal low resistance conditions where it might only take it, let's say, 10 minutes to move 50 pips, whereas in a high resistance that may be cut down to in the same amount of time hardly 15 pips. I've seen it happen, in fact, this week. So it's very important if this happens that I use pending orders that are really demanding a good entry with a big stop loss, because that way I'm getting a good risk reward and it's going to be, just a lot less stressful to hold it. Worst case scenario, we miss the trade because we're demanding too much. That's still a win technically because then if it's really high resistance, which I've seen it happen this week as well, even that second entry is wrong. Guess what? You're not even a part of that second entry. You see where I'm coming from. So it's going to save you that stress as well, mental capital. So also be aggressive with profits. Okay. Look, I'm never going to blame myself if I've taken profit 2 pips earlier. Nope. I might note myself and say, oh, it's low resistance. Why are you hurting? But I'm not going to be mad at you. So, yep, you're absolutely allowed to do that. Also, London session is where the bread and butter is. I've noticed, especially with these high resistance weeks. Definitely keep an eye on not just the obvious strong liquidity for the week, but also the counterparty because a lot of the times it's going to go there as well, especially if it's just choppy week like it was. Finally, when making a key decision as to close an entry, start a pyramid, or close one, let the macros finish because a lot of the times you might think it's going against you, you need to take action, whereas this might just be literally doing a deep pullback. Sometimes with the macros, we know it doesn't always do a continuation with the macro. It might do a counterparty move to the direction that you are on. So if you're selling and you see a deep bullish pullback, you might say, "Oh shit, I'm going to close it." Wait for the macro to finish. Okay. So let's look at the calendar now. So very volatile week. I'll be honest. NFP week is already very unstable. Thursday, Friday normally are off limits for trading, but even this Monday leading to Wednesday isn't exactly stable. You have some big movers here. You have the ISM, which moves out a lot. Jolts, thank God they're not on the same day. In fact, I actually wanted them to be on the same day because I don't have to worry about them on 2 days, but whatever. You have Jolts, sorry, ISM, then you have Jolts on Tuesday, 3 p.m. So we definitely, most likely, wouldn't be able to trade at New York because we're often required to just wait for the news and take the silver bullet move, internal range liquidity. And then, of course, you have the ISM again at 3 p.m. at Jolts. Obviously, that's going to move it a lot. I know for a fact, historically looking at it. And then Thursday is a bit of a strange case because you have no other major news, but you also have a lot of bank related news. Bank of England, monetary policy, official bank rate votes, official bank rate, all of that. So that's obviously going to require a lot of volatility, a lot of patience on my part, especially New York entirely. Might just have to be a no trade. I mean, it's a Thursday anyway, but if I am still engaging with lower risk, then I'm probably going to have to defer my trading to silver bullet as well. And obviously, Friday is definitely London might be good, but no New York, silver bullet might be where I need to hunt. Okay, so that's fundamental, not technical. Um, Again, this is that tricky part of the um, price action, basically, where it's just not easy, man. It's not easy for me to say one thing. I want to say it's risk on, okay? I mean, the technicals are showing that we have a balanced price range here. A BISI's been laid over now. What was a SIBI previously? You have a balanced price range, which case we shouldn't really be focusing a lot on this side because this has already been balanced. There's no need unless, and this is very important, unless we're doing a counterparty liquidity pairing move, in which case early week, we may actually do that, as in we go into this BISI on the daily and the weekly as outlined by the fib here. But again, nobody should ever close this BISI completely on the daily. Definitely not be closing below 50% of this BISI because that will invalidate my bullish risk on bias. Should we ever close a daily body, I don't care which day, I'm going to have to move to the sidelines. And I'm just going to have to stick to trading London, no other session, because it's just going to make things really difficult. It could literally turn out this week. So while I'm optimistic that we're going to have a good amount of movement finally this week, I still have to be very cautious with risk, okay? Because we definitely don't want to be taking as many losses this week, because especially if it's clear that it's high resistance, we sure as hell don't want to do anything with it. We're going to demand better price action. Why? Because we can. Simply because I can. It's easy. All I have to do is not press a button, not stress myself about it. And guess what? Yeah, fair enough. I might miss two or three trades, but that's nothing in the grand scheme of things because then I can go to the next session, which is better, cleaner, higher probability, higher risk reward ratio, low resistance. So if our price for getting there is just simply missing a couple of trades, I'll miss 5, 10 trades. I don't give a fuck. So it's just about thinking about it strategically and not just in a short term tactical mindset. So risk on, counterparty, BISI, weekly BISI for counterparty, no 50% close allowed below, and then drawn liquidity weekly. Target number one, daily high. Target number two, previous weekly high. With the volatility we have packed in this week, maybe, just maybe here, previous monthly high as well. And then obviously for DXY, it's literally the same. Small SIBI here that we may want to price up to. Again, technically don't really want to body daily, closing by the 50% SIBI here, or laying on top of this basically. And then obviously drawn liquidity is going to be risk off or risk on levels such as this low, and vice versa. So that is what I'm contending with. Just say follow the advice. There's some really, really good lessons that I'm thankful for because with the losses, if you look at them the right way, they're actually very, 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 very valuable lessons. If they're not free because you're paying for them, obviously, mental capital and the account loss that you financially took. But they are really good if you just keep piling them up and just keep noting patterns. And if you can just then fix those patterns, most importantly, you can be just an absolute monster in these markets. I'm already walking it like a fucking dog on a leash. The issue I'm having is I'm too early to the party. Literally, that's my issue. I'm too early to the party. That is what I'm trying to fix. Okay, I'm trying to bypass and defer my trading if I think it's high resistance, and I'm willing to pay the price because it's not free as well. The price is you might miss it. You might, and the word is might. It's not you 100% miss it because all the times it may not go anywhere. But the next trading condition is just so fucking easy. So I definitely want to be hunting that. Okay, especially when I can. There's no reason not to. So I'm gonna do that.